Just a few weeks ago, silver did something it had never done in modern history. It crossed $100 an ounce. A number that silver investors had talked about for years, debated, doubted, dreamed about. And then, almost without warning, it happened. And then, just as fast as it got there, it collapsed. Nearly 50% gone in days. If this is your first time here and you want serious analysis on precious metals and wealth protection, hit subscribe right now. We cut through the noise, that's all we do. Silver started 2025 at around $29 an ounce. By year end, it had surged well past $50, a gain that left every major institutional forecast completely in the dust. The London Bullion Market Association had predicted silver would average $33 for all of 2025. The market didn't just beat that forecast, it obliterated it, and that tells you something important. When silver moves, it doesn't wait for permission. Then, in late January 2026, history was made. Silver broke $100 an ounce for the first time ever. The gold-to-silver ratio fell below 50-1, a level not seen since 2012. Social media exploded. Everyone felt like a genius. And then the sell-off came, fast, violent, and unforgiving. Silver dropped nearly 50% in a matter of days. U.S. Treasury Secretary Scott Bessent called it what it was, a speculative blow-off fueled by Chinese traders piling into futures contracts. When that unwound, there was nowhere to hide. Here is where most people make the critical mistake. They see a 50% crash and assume the story is over. They walk away, and that impulse, that emotional reaction, is precisely why most retail investors consistently buy high and sell low. Because right now, as of late February 2026, silver is trading near $90 an ounce. It has recovered the majority of those crash losses in just weeks. And the structural reasons that drove silver from $29 to $100? Those haven't changed, not one bit. The Silver Institute has confirmed that 2026 marks the 6th consecutive year of supply deficit, 6 years in a row where demand has exceeded what miners can pull out of the ground. Even with mine supply forecast to hit a decade high this year, the Silver Institute still projects a shortfall of 67 million ounces for 2026. Above-ground stockpiles have been drawn down year after year. That buffer is thinning fast, and the demand side is only getting more aggressive. Silver is not just a precious metal anymore. It's a critical industrial metal with no good substitute in its most important applications. Every solar panel uses silver paste to collect electricity. The more efficient you want it, the more silver goes in. Global solar installations keep hitting new records. Electric vehicles use silver throughout their electrical systems, and AI data centers, the massive facilities being built to power artificial intelligence, are consuming silver in their electronics at a rate nobody anticipated 2 years ago. Here's something that barely got mainstream coverage. The U.S. government officially designated silver as a critical mineral in 2025. Washington has formally acknowledged that silver is a strategic national resource, right alongside lithium and cobalt. That designation changes how institutions, governments, and defense contractors think about securing supply. This is no longer just an investment metal, it's infrastructure. Now let's talk macro, because silver doesn't move in isolation. Gold is trading above $5,000 an ounce. That's the benchmark, and when gold moves like that, it creates the environment for silver to follow. The gold-to-silver ratio currently sits around 59-1. Historically, that still leaves significant room for silver to close the gap. The U.S. dollar is under real pressure. Trade policy uncertainty, record federal debt levels, and growing questions about the Federal Reserve's independence are all weighing on dollar confidence. Markets are pricing in roughly 60 basis points of Fed rate cuts by year-end. When rates fall, holding a non-yielding asset like silver becomes far more attractive to large institutional players. J.P. Morgan is forecasting silver to average $81 an ounce for all of 2026, more than double its average last year. Physical investment in silver is projected to rise 20% this year to a 3-year high, and some of the more aggressive analysts, the ones who got mocked for being too bullish just 12 months ago, are now talking about $150, even $200 before this cycle ends. I'm not here to promise you those numbers. Nobody has a crystal ball. What I will say is this. The people who called $33 the ceiling last year were badly wrong, and the conditions that made them wrong have not reversed. But let's be honest about the risks, because this is where most analysis goes wrong. It only tells you the upside. Silver is an emotional market. It amplifies everything. If U.S. economic data disappoints and recession fears spike, industrial demand forecasts get cut, and silver feels it hard. If the dollar stages a sharp recovery in a risk-off environment, silver can fall fast, and the memory of January's crash is fresh enough that another dip could trigger a new wave of panic selling. The LBMA's own forecasters projected a trading range for silver in 2026, spanning from $42 all the way to $165. That is not a typo. This is a high-conviction, high-volatility market. You need to know that going in. This is not a market you set and forget. This is a market you stay informed on, which is exactly why this channel exists. Not to hype, not to predict, but to keep you grounded in what the data is actually saying. There's one more thing you need to watch, and we're covering it in depth next episode. The gold to silver ratio. Right now at 59-1, it's sitting at a historically significant level. When silver hit $100 in January, that ratio collapsed below 50. Since the crash, it's expanded back out. That pattern, compression, then re-expansion, has historically appeared at major turning points in the silver market. When we break it down next time, it will either give you real conviction to stay in or show you exactly where your risk is. You don't want to miss that one. Silver was at $29 1 year ago. It hit $100 last month, a historic first. It crashed nearly 50%. It recovered, and it is now sitting near $90 with 6 consecutive years of supply deficits beneath it, a U.S. critical mineral designation behind it, explosive industrial demand above it, a weakening dollar around it, and institutional money revising targets upward. That's the real story, not the panic, not the hype. That's the foundation. Drop a comment and tell me, where do you think silver ends 2026? I want to know where your head is at, and share this with one person watching the silver market right now, because a lot of people are confused, and clarity is the most valuable thing you can give someone. We'll see you in the next one.